All right. Good morning, trade pros. Welcome to morning market update for Friday, July the 12th, 2019. Hope you're all having a wonderful day. Did the bulb go out on this light too? Hang on, guys. I'm just really close. Oh, wow. All right. So it should be a little bit better lit. Hope you're all having a phenomenal week, and we're getting ready for the weekend, right? Hope you have some great plans to unwind, to relax. The market's been doing that all week. We've had some consolidation this week, and we just broke out to that 3,010 level on the S&P overnight that we're looking at due to a lot of inventory up there. All right, so let's get started for the update. Today yesterday marked another record, this time for the Dow Jones. It rallied above 27,000, up 200 points, and broke that level for the very first time ever. Right, it took 372 days to get from 26,000 to 27,000. So over a year to break 1,000 or to gain 1,000 points. All right, this is all on the back of Jerome Powell's commentary and his pretty much cementing his view that we're going to go lower in the months to come in terms of interest rates. In the testimony yesterday, he testified twice, Wednesday and Thursday, both branches of government in the United States. He was asked questions, and out of those questions, all we could pretty much discern is that interest rates are going to go lower. The first expected cuts at the end of July. Here's what he said that was interesting. We are learning that that the neutral interest rate and the natural rate of unemployment is lower than we had thought, which means, hey, there's a case for cutting interest rates. All right. His whole agenda this week, you know how on Sunday we review the week ahead of what we're going to do. Jerome Powell's schedule last Sunday was, hey, I got to convince the market we're due for a rate cut. And on his testimony on Capitol Hill yesterday, he also said, so monetary policy hasn't been as accommodative as we had thought. All right. And on that news, obviously S&P 500 and Dow Jones, all stock markets are going to be gaining on the news of lower borrowing costs in the near future. That also pushes the yield curve lower on the front end, and some interesting things are happening here. So this is actually bullish for gold, all right, and bearish for the US dollar. So this is natural. When you have a rate cut, the dollar gets devalued because it pays less interest to have your savings in a US dollar. So people sell the US dollar to take that money out. And when they take that money out, they have to do something with it. So what do? They reallocate that capital to safe haven resources like gold, all right? Also, at this time, you're seeing stock markets rally. Okay, the stock market goes up on excitement of lower borrowing costs, which translate to everything, right? Lower input costs, then you're able to make more revenue. More revenue should lead to higher net income. All right, before you pay net income, you also have more money to return to your shareholder. With more income, you could raise salaries. Kumbaya, everyone's happy. The problem with that is that the Federal Reserve sees a weakening economy and doesn't believe that what their current policy is lines up with what the stock market, or rather with what the economy is doing. All right. And so what you're seeing here is a rally or optimism on lower costs, but the market hasn't yet thought about the fact that, hey, we might be due for a recession at some point. No, it's a dangerous word to be throwing around. So that's what we're kind of tracking with. Expect to see some more inflows into equity markets. But I think next week we're due for a pullback. We're bound to have a down week to retrace some of these gains and reset for another leg higher. All right, Donald Trump this morning at 8:49 tweeted, tariffs are a great negotiation tool. China devalues its currency. Biggest part of deal with Mexico has not yet been revealed. There's some excitement there. All right, Donald Trump is going to release more news on the agreement with Mexico, which should feed into the optimism of the stock market. So we're in a bull cycle. There's a lot of upward momentum, and I think we end the week on a nice pop. All right. Here's what he tweeted. Here's his full tweet. I am going to read it. When you are the pig, if I can read, when you are the big piggy bank that other countries have been ripping off for years to a level that is not to be believed, tariffs are a great negotiation tool, a great revenue producer, and most importantly, a powerful way to get companies to come to the USA and to get companies that have left US for other lands to come back home. So what he's talking about here is repatriation, right? Allowing companies the opportunity to bring money home from abroad to back home and to put it into use, which deploys more capital. right, which helps build the United States. He said, we stupidly lost 30% of our auto business to Mexico. All right, if the tariffs went on at the higher level, they would all come back and fast. But very happy with the deal I made. If Mexico produces, the biggest part of the deal with Mexico has not yet been revealed. China is similar, except they devalue currency and subsidize companies to lessen effect of 25% tariffs. So far, little effort to consumers, little effect to consumers. Companies will relocate to the U.S. So that's Donald Trump's goal here, is to bring back companies manufacturing to the United States. I think it's an amazing goal. I do think this. I think that with globalization, different countries have become like different neighborhoods in a city, right? This whole globe right now, it's so interconnected that the whole world is one city, if you could picture it that way. And there's just different neighborhoods in the city. So what is happening here is that certain neighborhoods of the city have specialized in different aspects. China's been manufacturing, all right? And China's manufacturing has produced lower costs for consumers in the other side of town, in the city, in the neighborhood of the United States, and they're importing for cheaper costs. As they sell products to China, China receives US dollars and in turn takes that money and puts it in the US Treasury by buying bonds and directly funding the United States government. So there's been a relationship that's going to change if we start to move those pieces around. And it's a complex web. And I'm going to tell you this, I think it's an amazing goal. And if that was to change, I believe that the net effect may not be as positive as people expect. If you put everything together, all the pieces together, because you're going to be driving around a Honda Accord at the cost of an S63 AMG, right? It's going to cost you a lot of money to have these goods produced in a soil, in a foreign soil, whose net income is higher than most people across the world. All right, so that's just my thought of the day. But that's Donald Trump's tweet, and that's his agenda, that's his motive. And so far, to be perfectly honest with you, it's working. All right, he's winning out the negotiations. He's at least at the table with the big companies or the big neighborhoods in the city, following with their analogy. And Mexico is just one of those deals that he's looking to concrete and cement. And he said there's going to be more news. And I feel that when that news comes out, if it's positive, the market's going to react positively, because think of all these months, 3-4 months ago. Think of all the negotiation, all the back and forth, the deals that fell through with China. All of that's remembered by the market. And when we get a win, even if it's with Mexico, guess what? The market's going to celebrate that damn win, and it's going to probably rally. So be on the lookout for that news. He didn't say when he's going to give the full details, but he did say there are other details for markets to hang on to. I think that's going to build a little bit of optimism in the inflow of equity. Institutional money is now piling into the market. We could get a little bit higher on this rally, but I do think next week starts with a pullback. This week, we're still on the bull until we see reversal signs, and we so far haven't. In Asia, Japan's up 0.2%, Hong Kong's up 0.1%, China's up 0.4%, India's down 0.2%. In Europe at midday, London's up 0.2%, Paris up 0.5%, Frankfurt up 0.1%. Modest gains in both Asia and Europe. And in the United States, Dow's up 0.4%, S&P's up 0.3%, and so is NASDAQ. Crude oil's flat for the day, gold's flat for the day, Bitcoin's up 2% again to 11,650. And today we have just one economic indicator at 1 p.m. for oil traders is going to be important. The Baker Hughes rig count, or how many rigs are out there in the water producing in the United States. All right, that's going to have influence because the U.S. is now the largest producer of crude oil. All right, and so that comes at 1 p.m. I have no intention to be trading by 1 p.m. Usually on a Friday, wrap up by the close of European equities, which is around 11:30 a.m. Eastern. So I wish you guys good luck. I hope you have a fantastic weekend with you and your beautiful families. Take some time to unwind, relax. We have a difficult job, but it's exciting and very lucrative. And when we have time off, we got to use it to unwind, recharge, and we'll see you again on Monday. All right, guys, have a great week and a great rest of your weekends. I'm going to turn around, open up the trading room for the final day this week. It's Friday. Let's wrap it up on a good note. And I'm going to give you some levels, some opportunities for the day, and some high probability trade setups. And then we're going to trade them through the day with our group. I invite you guys to join us. Check it out. Second, we have a lot of great people in there. And the value, values everybody that's in there with me and how we collaborate and the different points of views we get to express and share. I love the community, every single one of them. Now I got to turn around and spend some time with them. Take care and goodbye. Not I get to spend some time with them. Goodbye. The language you use shapes your reality around you. Careful what you say. The universe is listening. How's that for a closeout? Goodbye, YouTube. We'll see you later. Trade pros. I'm going to start with S&P 500 index. Marky will cover the Dow. Victoria will cover NASDAQ. And then we'll flip it over to Steven, cover oil. Got a great day ahead of us. Let me jump in. And let's start with analysis on S&P 500.